Hi, welcome to this video update, which is on the 13th of July. It's Saturday. Just going to be giving our outlook and forecast for gold. Now, in terms of gold, we're going to go and look at the chart in a moment. But as a trading opportunity, it looks like to us it's got fantastic risk to reward on it in terms of taking a short position. Now, the reason we're so bearish of gold is just basically how long speculators are. They've got a massive long position and smart money has gone short against them. Now we have to see gold in relation to the big picture of the US dollar and also what's going on in the global economy as well, which I'm going to discuss. But what we're going to do now is we're going to go and take a look at the trade setup. Please do keep in mind, it is my view as of right now. It can of course change in line with the market conditions. If you want all our trading techniques, our daily technical sentiment analysis of 14 Forex pairs and also of gold, you can click on the link beneath this video and get live access to our member center. And I'm going to start off by looking at just how long speculators are of gold by looking at our favorite sentiment tool in Forex trading, the COT. Then we're going to go and draw some levels of entry, stop and target. Now, COT Net Traders data first. Very quickly on the COT Net Traders positions before we go to another chart and draw levels of entry, stop and target. Now, in terms of COT Net Traders positions, just for anyone unfamiliar with the tool, it'll tell you what the smart money is doing against speculators. And it works or can be used in commodities and also in Forex as well. Now, you can look up a full video on how we use the COT Net Traders positions on our channel. Just search the video COT Net Traders positions indicator. But in brief, I'm just going to explain how it works here. We're interested in two groups only: large speculators, the green line; commercials, the smart money, the red line. We're not interested in small specs at all. We're only interested in big money. Okay. Now, in terms of what we want to see is the two groups diverge significantly against each other. Then we're going to go with the smart money more often than not. And in terms of what I've drawn on this chart is a 200k level line for both the speculators and the commercials. Okay. And if you look at the chart, what you can see is when the speculators move up to 200k plus or up to the 200k level, the commercials do the opposite against them, then there's a break in favor of the commercials. So here, speculators heavily long, commercials heavily short, breaks in favor of the commercials. We then come up to the 200k level again. This line's a bit thick, actually. It could have been a bit thinner, but you can see the green line. Speculators twice come up to the level here. Commercials drop against them. Prices break in favor of the commercials. Then the speculators get well above the 200k level. Nice break in favor of the commercials who oppose them. And again here, speculators flatline above and on 200k. Commercials against them. We form a top and then we go nicely down. And then when we come over to the right of the chart, you can see speculators well above 200k. Commercials oppose them again. And it looks like we could get a top. And this divergence here is similar to the one over here. And this is a nice breakdown. I've got a feeling we can get a nice breakdown again. So this is really giving us a bit of insight or good insight into what the smart money have got in actual positions against speculators. Okay, big breakdown in our view is coming in gold. Let's have a look at some levels of entry, stop and target. On the daily chart of gold, just draw my levels in a moment. But why are the commercials so bearish of gold? Now, I've said it in previous videos, you can actually just trust the commercials and not look at the reasons behind why they are. But we like to do it just to give us extra confidence in the trade. And that 200k divergence that we noted a moment ago, we only took it back to 2016. You can take it back as far as you wish, and you'll see the commercials will generally come out on top pretty quickly. Why are they so bearish? Well, gold rise is mostly on perceived USD weakness, or the market seeing a lot more USD weakness going forward. Market has decided that the Fed are going to cut rates this month by 50 basis points, which I've noted in our Forex videos. It's a big cut, and they're discounting that this month, and they're discounting the market for more cuts through to 2020, mid 2020. That's a lot of cuts, and the Fed comments don't support this number of cuts at all. They've just said they're going to be cautious, okay? Nothing more than that. And the US data, recent US data, hasn't been too bad at all. You just look at inflation on Friday, 18-month high. Now, in terms of the Fed, I think they could do one small cut, 25 basis points this month. And if you look at very influential Fed member James Bullard, he was the last, or the only Fed member at the last meeting to vote for a cut. And he said he only voted for a small cut as an insurance policy. He wasn't for doing big cuts going forward. You can see the market looking for 50 rather than Bullard's 25 and 4 more cuts through to mid-2020. The data is relatively good. There's no need for the Fed to do big rate cuts. They haven't indicated they're going to do that. The market has decided that. Speculators have piled in to long gold positions because obviously a weak dollar means stronger gold. I also think what comes into play is the market is very sentiment driven, and you've got the story of gold. The story of gold has been around since I first started trading, and it goes like this. The USD is going to go into oblivion. Really, that's the end of the US dollar, and gold is just going to have some fantastic, huge rise to the upside. Well, the dollar might collapse, but it hasn't in the 30 years I've been trading. And every time you see that story all over the media, speculators really, really heavily long, yeah, the dollar rebounds. Okay, so yeah, I think that's what the commercials are seeing. Okay, now in terms of gold, yeah, a lot of people talk of it being a safe haven. It's not really a safe haven in terms of actually does strengthen at this moment in time when you have strong stock markets. So it strengthens in risk on. Well, stock market's been pretty strong, and gold is not moving significantly higher. It's just chopping around. Okay, you can see it. And this sort of price action here, for anyone familiar with Dow theory, it's price distribution. You very often get erratic price action like this at the end of a trend. So you get the market start to get long gold, the story builds, you get the big move up, you get that exhaustion above the 1425 level. We come back, have another go, can't get through. Then we come down, speculators buy the dip, try and force it through, can't there. Then they force it through, that tail can't reach that tail. We exhaust back, come down, down, then we have another push up, can't get to the level, get through it, but that tail, lower than that tail, lower than that tail, and now we're probably going to have another go. So from our perspective, we just think, yeah, the speculator is just too long. There's not enough buying power to force a move through this candle tail. I personally think we're going to be coming down. I would basically come through that double bottom there. And in terms of stop, well, you got the 1425 level. Well back from that candle tail. I'm already in a short position. Mine's back behind that candle tail there, but I'm going to bring her in a bit closer when I update the member center probably on Monday if we do see a break to the downside. Okay, you could wait for a little bit more confirmation, come through the 1400 level, which would also be the 20-day moving average, but I just think the bullish argument is exhausted. So if I was coming in fresh, I'd come in through this double bottom. Okay, where could we go to? Well, speculators are so long, we really should get down to that level. And I'm actually going for a total retracement of when the specs built up their big long position from here. Okay, so first target, second target, your risk obviously there to there. It's a good risk to reward in my view. And you have got that really great divergence between the commercials and the specs, which has been pretty reliable in the past. Now, I know obviously that we could go higher, so to speak. It's not, guaranteed, so to speak. But the way we see, the speculative position against commercials and also the reasons that we've just gone through, it just points to a breakdown in gold from our point of view. Of course, we could be wrong, but I just like the look of the risk to reward on this trade, and we'll see what happens next week. But that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.